The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is September the 17th, and welcome. Lead off, 2 hours, Steve Rhodes. Don't forget he's got his Master Trader Series coming up a week from Friday, and if you want to learn many techniques, this is the opportunity to do it. I mean, we love doing that here at TFNN. We love teaching. I believe that there are some wonderful educators right here, and I know that Steve really loves doing these individual classes, and so do I. Hope to be doing one in October. So this is just a great opportunity to be able to check it out and see how you can benefit from the different techniques that he teaches. It's all very well seeing it. You know, I show you these charts, you look at these charts. Hardly ever has anybody, even my Master Trader Series, talk to me about that little cap there, that little inverted V. I do it. And you know, when you're watching someone do this stuff, and they do it automatically because they do it hundreds of times a day, you just kind of take it for granted. I know that when I'm at a talk, I'll be nodding away in agreement. How much is retained? That's really the only issue, is how much do you retain? I know I am terrible at retaining until I put my mind to it. Most of the time, and I've always done this, I read, and I as I'm reading or I'm listening, I'm busy thinking about what's being said, and then my mind just... Yeah, some people have a very sponge-like mind. They get the stuff and it just sits there and they regurgitate. The kids are like that. That's their job, and they stay that way right up until they leave school, and then slowly they become independent. They learn to think independently. But most of the time what they're doing is they're savoring what was thrown at them, because that's the structure, everyday structure. It's the way the mind is forming. Still forming until they in the late teens, maybe early 20s. Well, I've never had that, because what happens with me is I get information, and immediately I take that information and then I relate it to my own thoughts. Instead of shutting off and saying, just shut up, listen, I can't help it. The mind just says, oh, hey, that's a great idea. How does it? And then I start saying, how does it work in with whatever I'm thinking about? And I'm off on a tangent. About 20 seconds later, I'm back again, and that person's already moved on to the next step. I can't help it. That's just the way it is. That's one of the reasons why I've discovered so many highly individual techniques. The whole Chapman wave methodology, I would never have done it if I was a pure scientist, or if I wasn't just an inquisitive visualizer. As a scientist, you would have stopped. You would have said, oh, wait a minute, D, E, F, wait. Now you get a G. It's impossible. Cannot work. I didn't say it cannot work. I said, oh, wait a minute. D is what I originally started off with. And then I started in 1987 with my first, 84 is when I really started, but 87 was when I got my first big client, and that was Fidelity. And in August of 1987, I was hand charting still, even though I had my other work on computer. I still was sticking to the hand charting, and I did the Dow on a closing basis, and I got to a peak D at 27.18. I don't know what it was, something like that. And I said, gee, you know, I still see strength in this particular chart pattern based on all the work I had done. I said to my, I had a hotline, and I said on the hotline, I believe that we should still go a little higher. I'm going to give, I got a signal here, that's a sell signal. I'm going to wait a day or two, and if I get another leg up, I believe that would be the sell. So I got the exact sell signal at a peak E. Said to subscribers, to well, they were the clients, and we subscribed to the clients. And now we've got to be very cautious, and we came down. And that's where I learned that E, it can go to an E, and later on I discovered it can actually go to an F and even a G, but it can never go to an H. There is no such thing as an H. Why? Because like the piano scale, C, D, E, F, G, A, B, C, you've got two quadrants. and you never go from an A, B, C, D, E, F, G. There's never an H. In German music, German interpretation, ha or bemol, you've got a flat sign, but there's nothing like that in music as we know it. So there's a coincidence there. It's part of the structure I was thinking of later on, not at the time. So there are things that I look at, and I'll explain them right now. For instance, when you get back to a previous high, let me just run the numbers. The Dow's up 41 to 15,536. The S&P is up 6 at 1703. The comp index is up 21 at 3739. Gold is down a little bit, down 6 at 1311. Silver's down 17 cents at 21. Well, I got it in the den. Basil, could you look at silver continuous contract? I think it's in a dreaded H pattern. I will do that because it fits in exactly, Rob, to what I'm looking at here in the cup formation of the E-minis. So you got platinum down 6 at 14.29. High-grade copper is at 3.2. Hey, it's hanging in there. Amazing. Crude oil is down at 105.80, and bonds are up 11.30 seconds at 130 and 5.30 seconds, and the dollar is down again at 81.37. So let me just quickly do this, because it all relates to exactly what I'm looking at. You remember the rectangle formation? Well, we've got a kind of flag with a partial rectangle formation in the E-minis. It's made a peak C. I'm almost sure it's going to be a peak C today with no new high at 1703.50. The high was 1703.75 on the December contract yesterday. If it goes to that level, that continues leg C. That's why I'm saying 27 cents, 25 cents lower. And I've got a confirmed peak C. Could it be a peak C/E? I would say there is a chance. The chance is about 3%. Why? Because the stochastic's at 92%. You remember what I said about the squash pattern between the MACD and the stochastic, Chapman Wave proprietary technique? Has anybody ever spoken about that? I bet you can go through Stocks and Commodities magazine from now until going back until they began. You'll never read about this. It's a technique that I developed. And that says that this particular technique should take you to a C. Once you get to a C, you might have a few days, or a few bars in this case, of a pullback as the stochastic pulls back. And then it's the fast-moving average of the MACD that should take you over and get you to leg D or higher. Now, 1698.50 was the previous high back on the 2nd of August, plunged to 1618. I say plunged because that was a pretty big move to the downside, but in a very orderly fashion. If you're looking at the left side, right side price time, there was a perfect match from the breakout of the 8th of August what was the high, the low was 1620, and it went all the way back to 1618s in the same number of bars to the right side. That should have been a tip-off for me that it was actually a much more serious support level than I anticipated. That's why I got out of our short positions a little late. Still made money, but not like we should have. And now we've gone to a new all-time high in this contract. So that says in the 120-minute chart, I've got a right arm extension. I've got it as a peak F, which gaps up and then holds. And instead of breaking down and filling the gap, what it's done is only partially fill the gap. And now it's bounced back. So this whole area is saying between 1698 at this particular point to 1701, not the high of 1703.75, down to about, I'd say 1684 to 1683. Maybe it starts to get towards the 1680.25 low of yesterday before the gap. So I'm watching this whole area as a rectangle formation. That's giving you a consolidation at this particular point. Question about the silver. Let's go to a continuous contract of silver. Now, I've got a peak E in the top, right at the 200-period exponential moving average. The quicker and sharper you repel instead of propel, and you come away from that level, the longer it takes to get back, but it's still a magnet until certain things happen. And at this particular point, that says the magnet of 24.83. I just want to see. Silver is 21.84 and it's 21.81. Okay, so it's really close. The continuous contract is very close. Now, in the question Rob had was, Could silver continue to contract? I'm thinking it's in a dreaded H pattern. That's that lowercase pattern. You must be thinking of the weekly chart because it's broken way above that in the daily. But now let me draw that pattern, and I'm suspecting something is going on here, and I'll explain what I'm looking at. This is a pattern. Oh, I didn't put that up today. Well, it doesn't matter. This is a pattern that says you come down very sharply, keep hitting this as a support level. And that's that line here. If you're looking at Tiger TV, the middle chart is always the weekly. The one on the left is the daily. One on the right is the monthly. I love these things to pop up at the same time. Why? Probably start to see a lot more technicians in the different shows that you see, especially on CNBC, over a period of time, start to understand that when you get an immediate picture of three major time frames, daily, weekly, and monthly, it tells you sometimes conflicting stories, and it helps you clarify to a certain extent which one is predominant. For instance, there's a declining wedge pattern in the monthly chart. I call it the A, like a capital A. Let me just type this in, you'll know exactly what I'm talking about. I'll make it nice and big. Look at this. That's one thing about TradeStation. Their means of using technicals is just fabulous. Okay. I still haven't resolved the problem. I'll be calling them maybe if I have a chance today. I've just been real busy to find out about the new upgrade, why it didn't take to my notation. So that's the A pattern. And it's held very well above the 200 period exponential moving average, but the monthly chart still looks very poor. Now you get to the weekly, and the weekly says, I'm looking at a pattern that says, let me just draw a little clearer. We'll take it to there. That says, I've attempted to rally. I'm just putting that in there because if it breaks above, that's a green light right there. Another technique that I've developed. And this is the pattern we're looking at. I'm going to make this a little shorter. If I can just grab it right there. I'm going to change the color. In this case, I'll make it blue and I'll make it thick because I just want you to see it as a particular chart formation. And now this one here, I'm going to make nice and thick. Make it blue. And I'll thicken it up. Look at that. And this side hasn't yet turned down, so I'm only going to make it, if I can, grab it over there, color. Let's call it blue, and I'm just going to make it a thinner line. And that's like an H pattern, a lowercase h. What do I mean by that? It looks like a long move to the downside, with support levels, and it's sloping. There's no question about it. I'll be back in a moment. We'll come back and we'll be on with Mike in Long Island. But I'm going to finish this up because it is a very important pattern to note. If that left side H is tested and broken, that's negative. But so far it's holding real well, and I'll talk about that as soon as we get back. And then we'll go to Mike in Long Island.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Basil Chapman, Tiger Technicians Hour, and just finishing up a chart here. Give me a second. All right. So now what we're looking at is we're looking at the continuous contract of silver. And this particular continuous contract, just want to finish this up for a moment. I'll go straight to our callers. SI right here tells me that if silver on a shorter term basis on the 120-minute chart, which is trading at 21.8825, there's a continuous contract just a fraction away from the real contract, December contract. 21.42 is the support. If it breaks that, it could come down. If it doesn't immediately pop right back into the 21.80s, that's going to be a negative. And the weekly chart says that the only thing I've got, I don't have a trough on the left side. I only have a candle, and this candle with a long-legged doji says that, let me just draw this in right now. It will be oh, that's not right. I'm doing a little too quickly. Okay, it says that if 21.16 is taken out at any point in the next 2 days, you've got to expect that there's that gap between the 12th and the 9th of August with a low of 20.669. That area is going to be next. And then you're getting closer and closer to the dreaded 8. My suspicion at this particular point is that the low, a low has been established. I don't know if it's the low. If by Friday afternoon, that's a long time. It's the whole of today, the whole of tomorrow, the whole of next day, and the whole of Friday at 4 o'clock. Somehow or other, silver is up in the 2250s, not much further than where it is right now, but up there, having survived the week. I think that that'll be a very good sign to say that a bounce, perhaps another H pattern could be, excuse me, I haven't got a cutoff switch for that. could be forming. And in the weekly chart, that's really the key. The weekly chart says there's a lot of support somewhere in the 21 to 20.80s. Thank you. Bless you. But the monthly chart is lousy. And a lot of work has to be done in this weekly chart, which has good technicals, and it has participated. It was a little too steep and a little too deep, the pullback, but it was very orderly. So the orderliness to me is really important, and that makes that level to close somewhere in the 2250s or higher on Friday very important. I hope that answers you. I'm going to go to our first caller. Thank you for having patience, Mike. Let's go to Mike in Long Island. Hi, Mike. How are you?
I'd like you to look at a company called FMC, symbols FMC.
And they manufacture insecticides, etc., chemicals, etc., right?
Yeah.
Now, I love this chart pattern, walking the 9-period exponential moving average. In fact, I don't know, I've seen the name before. Whenever I see it, I always think of Fidelity. They used to have a holding company, I think it was FMC. I think that's where I used to do business through. I just don't remember anymore, but FMC always comes up, but I never really looked at the chart. It is walking the 9-period moving average. It has just been fantastic. The monthly looks superb. So that means go to the weekly. Well, the weekly just broke out for the first time. It broke out of a very long-term up channel. It's trading at 70.39 right now. It just so happens that yesterday saw its all-time high of 71, round number, 71, round number high. I'm putting that in red just for now because that's the level that it needs to break. And then there's a whole bunch of stuff that I'll be looking at. If I look at it, this has unbelievable. If I had just chosen the stock back in at the lows in 2008 actually, and said, wait a minute, this is a stock that has a perpetual motion back in March of 2003 when it is at $3.56, probably it's split or something like that. It continued up, holding that 9-period moving average almost all the way, except for one close, a little bit underneath the 9 EMA, all the way into the high of 2008. Let me just say that again. From 2003, for 5 years, over 5 years, to June of 2008 at 40.10, it continued this pattern of holding the 9 EMA. And now, let me just measure that in time. So we've got it from there to there. All I do is I go click, new parallel, and I draw it in from there to there. Oh, that is amazing. The month, to the month, it is exactly the same. Cub says FMC was the food machine company. Boy, this is a machine for sure. Oh, are you long, or what are you doing? Are you looking to short, or what are you doing?
I don't know. You tell me.
Oh, okay, so you have no position. I'm going to come back to this, and I'm going to explain something that I'm looking at. This is quite an incredible chart. Thanks for bringing it up. I'll be right back with Mike in Long Island and Garo in Newport Beach, California. Straight after this break, the Dow's up 41, S&P's up 6. 877-927.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, Now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and the Dow is up 41, S&P's up 6, and I'm still expecting leg C, if today's peak B. A little bit of a pullback, maybe a couple of days even, but not that much in points, and then I think we go to higher highs. That's the way I'm looking at it now, for a C and a D, and then we got to be careful. So we're on looking at FMC Core, which I bet that Mike didn't know this. Mike, this started off as the Bean Spray Pump Company in 1883, and Cub tells me in the den that it became the Food Machine Company in 1928 in a merger, and it's now FMC Core. So the manufacturer of insecticides et al. I put et al. Because it's just anything in the chemical-based area that pertains to the agribusiness, I believe. So now it's leg E in the weekly, and it's broken out of the channel, which says that 67.28 will be 67.50 to 67.28 will be very strong support. If it breaks that, then you can expect that a price move down to the mid-channel, somewhere into the 65s. But the weight of evidence so far favors the upside. On a very short-term basis, round number at peak D yesterday, there's no new high today, says based on the 120-minute chart, I just didn't finish doing that. Let me just do this. So that's an instant restart, A to a B to a C to a D, and there's a D as well. So in that particular, there's an instant restart. Put that circle in. I always put that to demonstrate to viewers. So that's a peak D. Now, is it even worth thinking of shorting, or is it worth thinking of buying? Every other time it's pulled back, it's been a buy. But when it gets to D, that's where you could take a little bit more time Oh, I should have done this during the break, and I didn't. You know what I'm going to recommend, Mike? Normally I would say, you know what? If you, for a 71.01, for a 70-cent experiment, that's not even as 1%. $77 is 10. So yeah, it's 1%. Not even. Yeah, it's a 1%. For a 1% risk, if you were to short it right now and it went 1 penny over 71 and you got out, I'd say that's something that you could do. I, in fact, am looking at signs that says within the next 3 to maybe 5 sessions, if it does take out the high of 71, that's still going to be a really important level. On a very short-term basis, it is over. I'm putting it into the category of overbought on a technical level. The price doesn't know that, but the technicals are suggesting that 88% in the stochastic are now starting to pull back. The MACD is just arching over. I'm hesitant to go short, even if it was just for 2 points. I don't know what 2 points is, what the big deal would be, because it's how it reacts over a period of 2 weeks. If it has not taken out between 71's fine, but if it hasn't taken out 72.50 to 73 over the next week, but instead is starting to push towards the 69.30, 68.20 area, then I'd be, for the first time, I say, now I'm looking at it for the first time, saying there are signs that it could have a pullback. Might be time, but it might be time and price, depending on how the action is, the speed with which it pulls back, and it breaks under 80% in the stochastic. I'm going to say, hold off. You're not a very short-term trader. I know that you look at the bigger position. I'm going to suggest you don't do anything. Give me a call if it breaks 68.70. That's only $1.50 from here down. If it breaks that, give me a call. And if it's just holding steady, hold off calling on this until today is Tuesday, until Friday or even Monday on this particular stock. I'm saying that's when Monday will give me a much better idea when I see how the weekly is concluded. At this point, every single 6 to 8 point decline has been a buy, a major buy. But now I think there's a chance that it's just about to get some kind of consolidation. I would be patient. Right at this very moment, as we're talking, would be the first chance to take a little short position. It's just not your style, so I'm not going to recommend it to you. So I'm going to say, hold off. I'm putting it in my book. I'm going to put it down, not for tomorrow or the next day, put it for Monday, and I'm going to say, Monday, look at FMC. We might miss a couple of points. I don't care, because this has been in a major bull market. Hope that helps you.
Yep. Thank you very much.
And good eye. This is a good one to look at. Mike in Long Island looking at FMC. We'll be back. Yeah, we've got Garrow online. Hi, Garrow. How are you?
How are you, sir?
I'm very well. I haven't heard from you for a while. You been good?
Yes, sir. Yes, sir.
Good.
Busy with my own business. Here I have a Visa. I bought it on September 11th at $185. Of course, I buy and sell according to the SAR parabolic. I just followed that indicator. It does miracles to me. So I bought it on $185. Still I have it. I don't know, should I hold it? The daily chart is overbought, but the weekly chart, my number is 193.14. From there is going to break out. Of course, my number is completely different than yours, but because I check with the SAR parabolic dot, and that's where it shows that from that point it's going to break out at $193. You think, should I keep it or get rid of it?
Okay. I'm going to do something now, and I'm going to do this for you. I'm going to go copy, paste, and up comes another chart, the exact one that I was looking at. And on this one, I'm going to include your indicator, because I used to use that quite a lot, but of course I have many others that I use that I use my own techniques. That's not a problem. Let me just put that in here, and there it is. So it broke above the SAR, declining SAR line, SAR, parabolic.
Yes.
And in fact, it's starting to move up. Now, you don't really have a signal to show you the resistance. Do you have a signal?
No.
You're right. Okay.
No, sir. No.
So now let's do this. What I'm looking at here is a pattern that's been repeated many times. If that ugly bar, I think there was a news event on the 31st of July in Visa, V, trading at 189.85, up 0.47. If that very sharp decline hadn't occurred, I would have had a beautiful cup formation, and I would have been very comfortable in saying, both on a weekly basis and on a daily basis, all the patterns that we've been looking at lately have gone to or broken above the left side of the cup formation in a very orderly way, and there's no reason why Visa shouldn't do the same thing. There are two things I'm looking at Visa which have had me a little bit concerned, and one is the weekly gave me a peak F, and I try to count that umpteen different ways. I can do it, but I would be formulating, let me just put it this way, I'd be manufacturing a technical indication that isn't there. I'd just be, in other words, I'd be form-fitting. I don't like to do that. So I'm going to, so I just want to look at your SAR, and I'm actually going to get rid of this because I don't want to get it mixed up with mine. I just wanted to see where it is. Now I'm going to go back to the weekly. The weekly chart says, at this particular point, based on the daily, you're in exactly the right position. It's gone to a C. It's probably a peak C. There should be a leg D. Now let me talk about what I'm looking at in the weekly chart, and this is one of the reasons. This chart, amongst many others, and I'm going to include, if you don't mind, NYA. Just as yesterday I was talking about looking at other gold stocks when I'm looking at the GDX to give me a sense of how individual stocks can help. I would have to say that Visa, I'm going to look at, and I'm going to try to compare it in some sense to a chart like the New York Exchange, which only just made a new recovery high into leg D in the monthly chart, but has the same kind of, not quite the same pattern, but close. And what I'm looking at is it broke to a new recovery high. So that has to be a peak B as of now. It could be a leg B, but so far it looks like a peak B. So my suspicion is that Visa is going to be one of the stocks that I look at to see in the monthly chart, peak F in the weekly chart, 196 round number high. Did you notice the round number high?
Yes, sir, 193.14.
Oh, no, mine, the 196 exactly was the round number high. Oh, I didn't put this in. I was thinking of typing it in, and then I completely forgot. It opens at 191 on the 25th of July.
Right,
it goes to 196 round number high. And then the low is 191. Why? Because it gapped up. So now I'm going to put here 191 op and low. So now I've got that information, and it says that under the circumstances I'm looking at, there is a chance that Visa will rally further, but probably won't make the real issue is going to be how does it handle 194.90, the high of the 31st. I'm even going to make it a little bit more decisive. Let me just go to my 120-minute chart. Peak A, B, C, and it extends to D. I just take 1 second here. 78.45. Yeah, to D. Instant restart. A, B, C, D. Great. Okay, that's what I needed to do. This is what I'd be looking at, because you are you put yourself more in the category of a swing trader on some of these stocks, right?
Sometimes, yes, sir.
Right.
Yes.
In this case, you'd be a swing trader because you got in on the rally and you're looking for an exit point which is more shorter term and is based on where the resistance, the most important resistance would be on the left side. In this case, I would say it's that resistance at 194.90. So now we've got that in mind. That's close to you. This is kind of the area you'd be looking at in any case. That would be now. As I recall, you get out of the position when it hits your target, right? Even if it goes higher, you don't care. You got a target. That's what you want.
Absolutely, yes, sir. If I get my $3-4, I get out. After that, it can go to $2,000 a share.
I love that. I think that's a fantastic.
I care less. Yeah.
I have a good friend who does work for me every once in a while, who trades on the first 15 to 20 seconds of the day, and all he wants to do, he's retired, been retired a long time. All he wants to do is to use his different. He's incredible at doing these mathematical studies and things. He has a way of just skimming off with the amount of money that he puts in, 3 cents, 5 cents, 10 cents, and what he wants to do is every month to make enough money so that he can visit his kids who live overseas. And that's it.
Wow.
Fabulous way of doing things. And he's really been a tremendous help for me over the years. Even though I tend to use my own techniques, in the background I always have his formulas and things there. So this is exactly what you're doing. You have your plan, you have your game plan, you're in, you're out. I love that. And what it does is it sets a rigor that says, I am comfortable with what I'm doing, and I want to do it over and over. So now let's see how you will attain this. The moment, if this is a peak C at 191.08 from today, because it doesn't take it out by the end of the day, the power of the MACD at expanding like this, the very wide beta, and the power of the slow stochastic at 92.49 says to me, it should start a leg D with a very good chance that it could even go to an E. It depends on the height. But the target I would have, based on what you're looking at, I would need to do this. So that's 191. If it breaks peak C, 191.08, see, what I'm expecting is that we're going to have a meandering day today, and up until about 2 o'clock tomorrow, we have a meandering day. Based on what my subscribers get in my opening call, my Dow chart, which is matching the left side very nicely from the June takeoff, this is now bar 13 that we're looking at, says that we could flatten out for a couple of days, but there should be, and I have to emphasize should be because we never know for sure, an upside break. That is a breakout to the upside. So I'm still very positive in my opening call. We've got 6 long stocks. Now we've got 5. We got out of one today with a small profit. The other 5 are still acting well. 2 of them are actually leaders in the market today because they're up so nicely. I'm looking at this and I'm saying, you know what? Visa has participated beautifully on the way down. It worked. It went with the Dow, although it came in on the 25th of July. The August 2nd was the high in the general market, so it was a little early, and its low on the 19th of August was, in fact, let me just double check here. Yes, was in fact a couple of days earlier than the actual market takeoff. So it's been a little bit of a leader in its own way, but it hasn't gone to the new recovery highs. This is the Dow hasn't gone to new recovery highs, or the S&P. I love your action. I think that if it takes out 191.08 and actually gets to 192.30, you're going to get your target. And I'm going to make a suggestion. If you want to hold on, I'm going to make another suggestion. I don't want to change your thinking, but I will make a suggestion as soon as we get back. You want to hold on, Caro?
Yes, sir. Yes,
okay.
Sir.
I'll make the suggestion straight after we get back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. We're on with Garrow, Newport Beach, California. Now, Newport Beach, as I recorded when driving down, is it Route 1 along? That's the main road along on the water's edge, right?
Yes, sir. It's a beautiful, very beautiful, sir.
That is a very, I love that. Why am I just blanking out with the bridge? What's it called? The area's called what? As you drive along? Route 1?
Balboa Island.
Yeah, and that is just so pretty. Anyway, so this is what I'm going to recommend. I want you on paper, just to make a note, because I've got a pattern here that says it should get really close, but probably not take out 196 round number high in this particular move. It's going to be a real benchmark, because if it takes out 196, that's going to change the monthly chart. I've got a leg G, which I have to probably recycle and call it a leg C. I'm going to make one suggestion, and you might even want to do this in real life. Keep one share and see if it takes out, this is leg D, and if it takes out your target, take your money, do whatever you, or on paper say, I'm going to pretend I'm keeping one share. I want to see if it goes back towards the 196 level and what happens there. because it might coincide, because on the basis that I'm looking at, I cannot get if today's peak B, I cannot get a sell signal until peak. So tomorrow, let's say it's leg C, whatever the reason is, it makes a new recovery high. Then on, that's the Dow. Let me just double check that I'm talking about apples to apples here. Yeah. Oh, wait, it made a new recovery high today already. Wait a minute. 15,549.87. Oh, this is still leg B. So I can't get a peak D, which I'm anticipating, until tomorrow's down. So that's peak B. Then the next day is up, and we call it leg C. Next day's down. It is Friday. Until Monday, can I get leg D? That means I can't get a peak D at the soonest until Tuesday. So I'm bullish until then. I've got the same cup formation, not quite the same because it's more like a W in the weekly chart. So I'm thinking here that the surprise might be that there's a move up, and it actually is it's almost like a blow-off top that we get in this particular phase. I'm not sure. That's the only reason why I'm saying there's a chance that because Visa has participated with the market as it's standing right now, it's up today, like the market is up 0.27. Visa is up 0.44. So it's working in concert. So I'm just saying, it would be fun to see if you're going to be able to take your technique and move it like another little step closer to doing something a little differently without changing at all your methodology. That's all. So congratulations, you got a really good move here. I suspect that Visa will test the 193.70 to the 194.50-ish area. That's where it might stop. But if it actually explodes to the upside, all I'm saying is that could be the one time that you might want to take off almost everything, keep like a little handful with a very tight stop at the point that you would have taken it out in any case, and just see what happens. So congratulations, Garo. It's just an idea.
Thank you, sir. Thanks so much.
Thank you very much, Gary, in Newport Beach, California. Now, let's do this. What I want to do is I had a quick question here about the TLT. Let's do that. The TLT has a pattern here that says it's holding the 102 area. It's forming some kind of a base. If this, and I'm watching it closely in concert with what I'm looking at over the next 3 to 5 trading sessions, if somehow or other, even if it pierces 102, but it comes right back in, that's going to be the first sign that on the weekly basis is starting to try to form some kind of support. Let's put that together right now with the dollar as we go out, DXY. Folks, my opening calls, my daily newsletter, you might want to check it out. This is a fantastic time for it. There are a lot of things that are happening that we are looking at. Yeah, the dollar's in a pattern that says, gotta hold 80.75 or it's in trouble. All right, I'll be back with Tom O'Brien this afternoon, and thanks for being here. Stay tuned for the Options Hour and all the other great programs here at TFNN.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.